Hi guys, ExiledInvestor here. Slap That Ask is coming right up, but first a quick apology. Unfortunately, at the end of our last recording session, we found Millennial's recording files were corrupted. We did manage to recover the audio from a backup source, but it means there's no Millennial video for those of you who watch the show on YouTube. It did mean it took a little while longer to get this episode out, so sorry for that, that's my fault. And finally, the episode does end fairly abruptly due to circumstances out of our control. So sorry about that too. It's still an hour and a half of great content. We had a blast recording it, and it is on the other side of this intro music.
Okay, guys, welcome to the next episode of Slap That Ass Podcast, the podcast by investors for investors. 1 month into 2021, and we already have crazy events. Today, we are going to talk about when old school meets new school and the great GME short. We're going to talk about Citron, WallStreetBets, stock twits, and the rise of the retail trader and how short sellers can still get burned. But first, our disclaimer. This podcast or any statements made on this podcast should not be interpreted as a recommendation to buy or sell securities. This is for educational and entertainment purposes only. We are not licensed financial advisors, and what we do is fucking stupid. We do not know your personal financial situation, and instead you should seek out an advisor. You should assume that any security we mention may be held long or short within our own personal portfolios that is mentioned on the podcast. So I'm MartiniRita. I invest for a living and I live in Airbnbs. I have an educational background in systems engineering with a concentration in finance. Joining me today are Millennial, Exiled, and Redemption. If you could first introduce yourself, that would be great.
How's it going, guys? I am a full-time Twitch, YouTube live streamer. Left a career of about 10 years in digital marketing, working at an executive level. I learned how people think and applied that to the market. So now I've gone from being a marketing degen to a market degen, trading qualitative fundamental analysis.
Awesome. Exiled, if you could go next, that would be great.
Absolutely. Hello. I'm ExiledInvestor. I am a long-term investor, and my background is in digital marketing mixed with some real estate and construction.
And last but not least, Redemption.
Hi, I'm Redemption. I am the dark pool conspirator, ex-institutional trader, most recently seasonal swing trader.
Well, thanks for introducing yourselves, guys. This is our crew that we hang out with every day, and I'm super happy to have them on the podcast. But as I said, we're going to talk about the great GME short. I don't know if you guys have seen, but just to give a brief overview of what has transpired in the last few days and into last week. We started to get a little bit of inkling last week that at least I saw on social media that Citron had put out a short report. And if you're familiar with my live stream, we kind of tried to read what retail traders are doing or what the psychology is of the market. And, WallStreetBets likes to meme GME, a couple of others like Palantir. And they basically chant, "We like the stock, we like the stock." And, Citron, I think, started to poke the bear by putting out a live stream and putting out a report like they usually do. Citron is a short selling firm that has a big effect on the market. Whenever they put out a report, it typically takes down a stock in price. And, it seemed like collectively the internet decided to strike back. And it was really interesting to watch GME continue to rise in price over and over again. And, I think we started at 30. As of close, I think we're at 140. So it's an incredible price rise, multiple halts all through the last week. and into this week. And it seems like everybody who talks about finance is talking about this. So I wanted to pose to the group, now that you kind of understand what's going on, is like on a really basic level, what do you guys think is going on? Because there's different theses out there. What do you guys think? So I guess go ahead, Maloney.
I think they took a mob of people who have constantly been mocked and derided. And I'm talking about retail traders as a whole, not just WallStreetBets. Retail traders have been mocked for over a year now, just mocked endlessly by institutional investors. Most of us here all of us here are retail traders.
Yeah.
None of us here is a massive institution. And institutions have balked and laughed. Fool would be the lightest thing I've been called this year. Absolutely fucking insane is probably closer to where I'm at. But the gains can't be argued. The gains just can't be argued, and that it's consistently gaining is driving them even further. And so what you've done now is GME, as the banner child of what's going on, has become the rally. It's become this is going to be the example of retail traders telling the institutions that they can just bite it. Their thoughts no longer will be the only voice that matters. And you've got people that for years have just been towing the institutional line, voices like Jim Cramer that are out there, that all of a sudden are going, what the hell did you expect them to do? You kept telling all of these people that they're wrong and they're insane. Meanwhile, they're watching their portfolios explode. So, I mean, and they make it that much the worse when the institutions are now doubling down. See Citadel and
Melvin Capital,
Cohen's firm. Like, you just see these guys coming in behind the short sides of this and getting blown up. Absolutely blown up. And it feels like victory on top of the profits. So this behavior is not going to stop. I think what we're seeing here is people realizing that it's a whole new right now.
Yep, got to agree. It's a fuck you to institutional investors. I think it draws a lot of comparisons to the Pirate Bay in terms of the mentality there. It's just a fuck you. You're not telling us what we're doing. Just and you know, we might sound stupid or whatever. But collectively, we have enough buying power to dick you. And that's exactly what they've done. And they've gone and proved it. And the minute they find a victim, someone who comes up and tries to throw sand in their face, like Andrew left, that's when you see them snap back. And I fucking love it, honestly. I absolutely love it. So, yeah, to me, it's no different to... It's basically analogous to the a hedge fund can go and pump whatever stock they fucking want on CNBC, on Fox Business, Bloomberg, any of that circuit. A retail investor doesn't have a voice in that space. No. This is the digital equivalent, effectively. I'm not advocating for it, but I definitely understand it.
For me, I think
as we're sitting here talking, GME's at 170.
You're kidding me.
Oh, damn. I made a pile more cash.
Like, I keep saying that they mistimed this because you got a whole bunch of people at home who have dipped their hand in day trading, and they had this whole mentality of like, you know, hey, I'm going to get another stimulus check and we're going to keep pushing this like MFR up. Like, it seems to make sense that they would, you know, wait till after everybody's plugged in, after everybody's like deeply invested in GME, and then strike. But I don't know. I guess my timing's very weird with.
So
it's really easy to like. It's really easy to sort of see the stupid side of it, and it's a space that has personality. Is old Wall Street Bets, and it's easy to overlook the fact that there are some very, very, very skilled people in there, and there's institutional guys in there. There's people going there looking for picks. So there is some absolutely amazing brain power in there behind the veil of idiocy. Not saying that this is an example of it, but it's kind of representative of the market as a whole to me, where you've got the people who go first, the people who are, I don't want to say the architects of the scenario, but they're definitely further up the line than the white names in the Discord. And yeah, you've got it's a spectrum, for want of a better term.
So as we're talking, our live studio audience, by the way, is telling us that GME is now 195 because they suspect that Elon Musk has said Gamestop. And if any good memer knows that, for those of you who don't understand, that stock with an N is it's a meme. It's a fun way to refer to stocks, and stocks only go up. And the thing is I am so surprised that the mainstream media has ignored retail traders and just pushed them aside. What I think is going on, though, I think is a little bit crazier than you guys think. I think it's really about market structure. Okay, so and the limited risk that institutions and brokers can hold. I read a little bit more about who are the short sellers behind this. So there's Citron, there's Melvin Capital, there's Citadel. If you're familiar, they're a market maker, and they also do payment for order flow with retail traders. And they all know that they constantly get scalped, and that the idea that they are getting zero commissions, I think they understand. Maybe not that payment for order flow exists and that they may be getting screwed over anyways, because there's for me at least, famous disclosure on Robinhood as a brokerage that they may have not had the best execution quality, or at least that's what the SEC is accusing them of. So, but they understand the subtext of there's somebody screwing them, right? And then that idea, so they're having their protest moment where they said, you try to fuck us, we're gonna fuck you. And I don't think it's like a coordinated thing, but it's in their mind, and it's their protest, their movement. It is their movement. I'm going to call it a movement. I mean, what have we seen this year? A movement of voices who haven't been heard. Of people who've been told that they're Scrabble. I don't know. But the volume, by the way, guys, the volume of retail traders has gone from 5% last year to 27% of the market. And I think the market structure that's out there is that they can collectively hold big bankrolls through options derivatives. So they've discovered that, and that has taken these big guys and really, really give them a number, Did anyone see what Kramer had said about this all? I know I watched it. I know Millennial watched it. Did Exiled and Redemption watch it?
I did see it, yeah. Ironically, I saw it linked to one of Wall Street Bets.
What do you guys think about him? It feels like he's like the only voice for the retail trader that's not pinning this on them.
I think you've recognized this early. You see the commentary that he's accompanying this with all day long on Twitter, and the ones railing against him right now are institutionals. You're seeing guys that used to be reliant on Kramer to pump their stocks for them, shitting all over him. Oh, all of a sudden now he's a hack. Now he's just spewing what people want to hear. And it's like, well, all he's saying is you done fucked up and pissed off the wrong person. All he's saying is, here's a group of people that have had enough, and it's quite evident. And if you want to get in the way, go ahead. But if you're supposedly that smart money, that doesn't look too smart to get in the way of a train. You're literally saying, well, on principle, I'm opposed to trains. I'm more of an airplane guy, so I'm going to stand in front of this train that's coming at me. And it's like, okay, go ahead. That's going to hurt. And I think that as Melvin and Citadel and Cohen are currently evaluating their positions after hours today, the pain is quite real from that train.
No, I agree. Like, the pain is really bad with that thing, but I kept saying that there was a way to play this that they should have. I'm surprised. Like, I think they just got really way too bold and way too cocky, especially when like Left challenged the whole like subreddit and pretty much the entire internet. I think there was a way to play this, and that was I think I told you like the day of or something like that, Millennial, when it it was yesterday when it hit 140, and then into the morning, I told you that I wanted to short this, but I need a system of events to happen first. One is I need them to talk about their stimulus checks first. So once they release the stimulus check news, people are going to plug their money into this thing because they're like, well, I missed out on it. Or the mentality is going to be, hey, I made X amount when it was this much, this thing is crazy. I don't want to miss out on this thing. I'm going to plug my entire stimulus check in there. They're going to push it to whatever price they like. I was thinking that they're going to try to push it to 200 or something like that, which, we're seeing today. I figured that would have happened when the stimulus checks got announced, but you told me that they haven't talked about anything about the stimulus checks. And then what happened on the same day? I think it was like Schumer came in and said, yeah, no, we're going to push the stimulus check talks down to next month. And then GME just died. And my assumption of what happened was that whoever was in this thing was like, oh shit, I'm not getting my stimulus check at the end of the month, so I can't keep staying in this thing. I might as well take some money off the table now to pay for my rent, this month or next month or something like that, my expenses, all that sort of stuff. And then we saw that massive pullback. This rise back up, though, I think it's the further fanaticism, because when something hits mainstream news and it's like super positive and, absolutely crazy like this thing is, everybody else that didn't have a account, I'm pretty sure like you could do it all in a day, right? Where you could set up a Robinhood account, whereas like in Canada, you have to have, people look over your papers, make sure your identity is who you say you are, all that sort of stuff. In the States, or I think Robinhood or whatever, you just submit your driver's license, whatever, in 2-3 hours, whatever, right? Whatever, right? You're funded with your credit card and that sort of stuff, right?
Mm-hmm. Yeah, I gave it to before I understood what was happening with Robinhood, I gave it to a few friends, and one of the comments was, I've never invested into something I don't know about so quickly. I was like, oh God, that's not what I meant for you to do with it. Oh my God. Like, I was just like shitting bricks. I was like, I meant for you to just go by your own, like, I don't know, self-direct in like an intelligent way. And I was just like, oh my God, what have I done?
Now they're doing long out of the money calls.
Yeah, I know. It's like, what are you doing? Stop that. Please. You don't understand. But yeah, it's super fast in the United States. Webull wasn't as quick, but Robinhood was. I don't know who signed up for it.
I can guarantee you, and I don't know who posted this, but to WallStreetBets' credit a little bit, I think that a lot of them are really, really like dumb, and according to that post that we read today, that 99% of those people can't rub two pennies together, but that 1% that is there, that is actually intelligible, the ones that talked about like how lumber liquidators, they basically use derivatives to manipulate the price and stuff like that. I think that Like there are some intelligent people like that, but it's funny because they got in trouble with the SEC for lumber liquidators for doing the same thing, where they pumped lumber liquidators.
So they've gotten in trouble before.
Yes, prior. This was what they were on the hook for. And then I don't know if it was like Jartech or whatever. I don't know the whole long history of WSB. I kind of just stayed away. I went there for the occasional like lost memes or something like that, but I remember the lumber liquidators one, and the SEC came down on them for that. And I don't know why people think that if they private the subreddit that they can't subpoena for access, because most of these tech companies
sure Reddit
work
would
directly.
Give that up.
Yeah, like they would give them up in a heartbeat. They're like, oh, so we can't so you want to subpoena us for this thing? Yeah, they're not going to say no, screw you, whatever, right? They're going to be like, FBI, okay, sure. What do you want? Do you want the logs, the edit logs? What do you want? Like, they're in collusion. But I think that there's something, like you said too, Rita. Like you said this before me. I think there is something on the horizon that these guys aren't seeing. That it's all glory and fun right now, but most of these people who run these funds and most of the financial institutions, they're very, very fucking petty. And if they can find a way to screw you over for that money back, they will.
Well, I was trying to think of the only example that I can think that didn't happen with retail traders, but rather happened amongst hedge funders. And the last one that I can really remember was, did you guys ever hear about Bill Ackman's short on Herbalife? Do you guys remember that?
Yeah, absolutely.
Millennial,
like the
maybe?
Longest time.
Okay, so, well then just for everybody who's watching, so Bill Ackman went to short Herbalife, which he believed, his thesis was, well, this is an MLM. They don't actually really make money. Most of the revenue is from new people who are trying to, new business owners who are trying to get into Herbalife, and that's just how an MLM business is. It was his assertion. Obviously, the company had something to say about it, but what ended up happening was really interesting. Was what was his name? Carl Icahn decided that he was going to take the opposite position. So it was like a heads up showdown. There's a documentary on this. If you're curious about it, it's called Betting on Zero. I think it's on Netflix. But basically, what it seemed like was that Carl Icahn, with his big bankroll, kind of screwed over Bill Ackman, right? And it seems very similar to what's happening right now. And we didn't see anything, like I didn't see an SEC investigation after that, or a setup for something. It seems like...
Well, Icahn was already balls deep in it.
He was? Okay, maybe I'm misremembering
Icahn
it then.
Went first. He and so Ackman had, I can't remember the name of the firm, but he had an independent third party do an investigation on behalf of Pershing Square, and they came out with the same result Pershing Square did. Make of that what you will, but I mean, you're paying them, so they're probably going to tell you what you want to know. But they came back and said, yeah, it is a classic pyramid. And then they famously, if nobody's seen this before, go watch it. It's a great example of two turds throwing shit at each other. They had it out on stage, and they had a huge bust up over the course of like a few years about Herbalife, because Icahn was so insistent that no, it's a good company, it's got good fundamentals, and it's persevered. His argument was basically on the premise that, look, it makes money, and it's a growth business, and it's been around so long that it won't. It couldn't be, because MLMs always fail in a short amount of time. And it's one of the few times I've actually agreed with Bill Ackman on something big. They expanded by moving into other countries and progressively went down the wealth line into the poorer countries. And yeah, that's why it's still around today, though. So,
very interesting.
Love it.
So, well, that mention was about AMC because AMC is also on the top 10 of comment volume of WallStreetBets, and it is also heavily shorted, I believe, right? You remember how heavily?
Yeah, it's not nowhere near as high, but it is fairly heavy. Yeah, it's high enough.
So you said nowhere near as high? Go ahead.
Yeah, no, it's nowhere near as high. It's about half of what GME is. The issue with AMC is here's another one that's kind of a dangerous cocktail as far as retail trading goes, where we've seen bankruptcy go from a term of you're not allowed to touch bankruptcies, right, from the institutional side, to bankruptcies are a play. We saw that earlier this year with Hertz, where as Hertz got closer and closer to bankruptcy, it bought up. Like it was unheard of. Nobody could even fathom what it was we were seeing, and yet it was happening. AMC, the bankruptcy talk has been so thick, and now they've got positive news of another $1 billion flowing into them. So you've got this crazy stock with AMC here that's $1 billion of capital flowing their way with a bankruptcy that retail traders love and a high short interest. This thing is nutty. We were memeing on this just as the market closed here today, and I was like, you know what, whatever. I'm just gonna get into it. I did. I got it at 466. This thing is up 25% in an hour and a half. This is ridiculous.
Yeah, I punked out,
but it's ridiculous.
Mm-hmm.
GME is 196.
Mm-hmm. This is unbelievable.
In February, when I was talking GME in February or March at $8, I had people lined up around the block to tell me what an absolute moron. The GME was total garbage.
So when
I was like, I think some long calls would be okay. I think we'll be recovered, but holy fuck.
Oh my gosh. So what do you think? So I think there was some hinting to what do we think that this is setting up for? I mean, because I think it was Millennial who said you think it's setting up for something. What do you think? Well, do you think anything is going to come out as a result to the group? Also, I know I want to hear what Millennial has to say too, but.
So, I mean, so I trade market psychology, guys. I trade large groups of people and how they move. And the issue that we're having here, and this is one that I've stressed over and over and over again, a book that I highly recommend you go and get is Spider and the Starfish. And people read that book and be like, I don't fucking get it. It's got nothing to do with stock market. It has nothing to do with stock market. It has everything to do with leadership structures and how they work. And the way that the stock market used to work was like the body of a person, right? So you have a couple of decision makers at the top, and everybody does what they say all the way down to the right. And those decision makers turn the head and they decide which way the body's going to go, and they make decisions. That's kind of the outdated model that we've been using since the 1800s. There's a guy on top who makes the decisions. The other possible leadership structure that you have is more like a starfish, where it's what happens when you take a starfish and you chop it up into a whole bunch of pieces. You just get a whole bunch more starfish, right? That's what's happening here. You're going to see institutionals trying to figure out what to do. You're going to see regulatory bodies trying to figure out what to do. Where's the head that we cut off to stop this? And the real scary thing is there is no head. And the more that you take a swing at this thing, the more that you try to cut it into pieces, the worse it gets because it just grows. There has been an abundance of people that over this last year have heard about the stock market and how you can get into it and zero commissions and all this, and they've got checks on the way. Checks are on the way. The people that have been humming and hawing and sitting on the fence with this, I think the influx of money that is about to happen is staggering, absolutely staggering.
Yep.
It like nothing. it is hold my beer for 2020. Like,
so you know that scene. You know that scene in The Big Short when he's on the stage with the guy who's meant to be Steve Eisman is on the stage with the Bear Stearns guy, and he's like, so in the time you said that your stocks dropped, in the time you said that GME's gone to 220.
Boom.
Exact. I'm so fucking happy.
I wish I'd gotten those 200 calls. I was thinking about it. I even loaded it into the queue. I thought it could. Wow, I was right.
It's over 230.
233. I can't handle this. This is unbelievable. So I know it might be boring, but I think I need to talk about the market structure of why I think this is happening. So there are a couple people that you may not see them very much, but it's the reason why the U.S. market works really well. We basically have a lot of liquidity here. One, because the world likes to trade here, but two, because we have market makers that post NBBOs, National Best Bid and Offer, and they provide liquidity for the market. But they also make a fee because of it. Now, if you post liquidity for options, you're not playing directionally, right? You're trying to make the spread, which is the difference between the bid and the ask. Ultimately, the market is an auction system. So there's one guy saying, hey, buy this from me. And there's another guy saying, hey, I want to buy this from you. And so what happens is a market maker will sit there and post those. And then every time you buy like an option, what they have to do is they have to delta hedge. And every time the stock moves around, they have to go buy or sell a few shares. So that way they net out, right? They don't really have a ton of exposure, but yet they serve you these contracts that when they come due, somebody has to deliver stocks. And so every time the stock moves around, they have to do this. But what do you do when there are no shares? If a stock is shorted so much, there are no more shares. And if people who own these shares, which is they are well within their right to hold on to it, what do? You go bust. That is what is happening right now to some of these short sellers. I don't know about the health of the market makers. I haven't read anything about Citadel, which is a famous market maker, but I'm seeing Melvin Capital had to receive a backstop from Citadel in the amounts of billions of dollars.
I think they're going to need another one before dinner.
I think that's what we're observing right now on this podcast.
Oh, fucked.
I think we're observing that. For me, this is the opposite of the Big Short. This is the big long. What happens when Melvin has to close his short?
It's going to get a lot worse too, because like right now, like I keep saying this, no one thinks it's a factor, but I think it's a serious factor. It's that capital injection of the stimulus checks. When the stimulus check comes out, I think this is going to continue to run because right now it's just because everybody's jumping on the bandwagon. It's become a meme, mainstream media, et cetera, right? But once everybody since this is if they get the checks next week, this is still fresh in their mind. They have not forgotten about this thing yet. They have nothing else to latch onto news wise. So I think that stimulus check is going to cause this to jump even further. And that's not advice or anything like that. That's not a definitive guarantee. It's just thinking, most of these people who tried to get in before, like yesterday or day before that, they probably FOMO'd, like saying, "Oh, I got this back when blah blah whatever." Right? Imagine their FOMO now. in the last 2 days or so. It's like, oh, this was $20-$40. Then it became $60. Then it became $140. Now it's like $230, $250, whatever, right? They're getting increased FOMO, and because they're getting, if they do get that free cash, I can almost guarantee you they're gonna pour into this thing. And that's like what? How many people actually qualify for that free $1,400 check? And can you imagine, like, even if they're not even citizens, if you're just like, there in the U.S. or whatever, and you apply for the check, I would imagine they would just give it to you with this government. But that's a whole different issue. But like, what was it? $1,400 and 300. Like, let's take a 30% thing. So like $1,400 and 30% of the U.S. population, which is what? About just under 100 million people. Let's just say 100 million for that sake. So you have $1,400 with, 100 million people who are just out of work, saw this thing in the news. It's like, oh, this is better than me buying my weekly scratchers because this is more guaranteed or whatever, right? They convince themselves into it. They are just going to self-convince them because they saw something shocking on the media, and they're going to convince themselves to take that play. That's what I think when catastrophe is going to strike this stock, but it's going to be entertaining to watch from the sidelines.
Well, okay, so I'm gonna pose this. Now that you're saying that, do we have to worry about the health of our brokerages? Because remember, I said in the beginning, right? The brokerages have to pay up if their customers can't. Whoever's got these short calls,
I'm not really worried about my brokerage, just because of banking works a little bit differently in Canada than it works in the States. So my brokerage is actually one of the banks in Canada. We only have like 5 banks. I know in the States you guys have like community banks and local banks and all kinds of credit unions and all kinds of crap like that. But really, there's only 5 banks in Canada. And they are hard backed by the Canadian.
Oh yeah, they got like each of them have at least like 100 billion just for like loans to house people to buy houses and stuff like that.
So for me, that question of like, do I have to be concerned about my brokerage being able to cover if it's on the wrong side of this? No, because the Canadian government will just show up and bail them out.
I mean, for IB at least, I think they would have probably either margin called those people by now, or just kind of honestly, I don't think a lot of, because IB is such a dinosaur broker. They're not like the sexy like Robinhood layouts, and they're not TD and stuff like that. I think IB should be relatively safe. I think they might get hit because there's always some idiot out there, but I think they should be relatively safe because, they're not the sexy TD or Robinhood. I think Robinhood might actually get hit by this.
God, I hope so.
I guess I'm not worried just about this stock. I'm saying if we get the stimulus checks and this continues on for like someone has to pay up, right? There is always another side to these options. I do not think that I'll bring up a term. It's called zero sum. It's somebody wins and somebody loses. I don't think it's that way in equity. I do think it's that way in options. And I mean, in 2008, we saw that everybody was interconnected. Nobody, we all thought, oh, well, it's just happening in the US. Well, it's just happening in mortgages. It's just happening is this the setup? I feel like I'm in The Big Short, and the scene where he's trying to determine if there's a bubble. Right, and he looks at the fucking the crocodile in the water in the house where the guy is paying rent, and he's asking the guy, am I gonna get kicked out of my house? Like, and he doesn't want to answer to him. It's just, I feel like that's what we're looking at right now. Granted, that's a year later is when it actually happens. You know what I mean? Like there is SIPC insurance in the United States. And I don't know about the structure about Canada, but yeah, the government should backstop brokerages. But Are we looking at the start of something? I mean, what do you think,
Yeah,
Excel?
you're watching
very
a gaggle of retail investors just run through a hedge fund like it didn't exist.
Mm-hmm.
It's
Melvin
effectively shut
will
down.
fall on this. They bet the farm, and they doubled down.
Never
And
average.
Where is GameStop now? 230? Did we hit 230 yet?
We're at 226 right now with a high of 244.
They're done. They're done. They're done. This will be like, this is the line drawn in the sand. Citadel is one of the biggest players out there, and they picked their horse in this race and they lost. They lost. And that's not going to stop. You think that retail traders are going to just take the win and be quiet and modest about this? No freaking way. It's going to roll into the next one, next one, next one.
And now they have more money.
Right. They've got more money to just do this again and again and again and again. And you end up with this problem of, okay, so what do we as the institutions do? Because we can't join them because all of our rules say that we can't get on board with what they're doing. And yet, by taking the other side, we are consistently killing ourselves. I think they do what institutions do, and they don't change because they're so big, they can't change fast enough to be relevant. And the government's going to have to swoop in and save somebody, because eventually it's going to be somebody fucking massive. And you're going to see the government have to swoop in just like they did with the Big Short. They're going to have to swoop in because institutions are unable to evolve and change quickly enough. And as a result, we're going to get all kinds of regulation. You're going to see things fall left, right, and center. But interestingly enough, I think this time around, it's not the little guy, the retail trader, that's going to get cucked on this. It's gonna, and this is where I do get a little bit concerned. Is I think the people that this hurts most are, and I'm not saying boomers to be derogatory here. I literally mean the boomers. Like I'm thinking about my parents here, right? The people that you know that have their money in mutual, that have their money in these mass, have their money in the safe place to put your money. They're the ones that are going to get hurt the worst. I think that's my largest concern is those that are relying on institutions that play by the rules, they play it safe, they're responsible with their money, who are actually just about to get the biggest dong in the face that they've ever received. And that's taking seniors with them. It's scary.
Your mic's cutting in and out sometimes, but I don't think it's so much them, because most of them are, and I hate to say this, but the whole balanced portfolio thing, most of them aren't short a lot of stocks at all. Like they don't short, they only go long. I don't think they're going to be affected as much. That the people who are going to get fucked are the ones who are like essentially hedge funds, or like the short funds like Andrew Left and Citron and stuff. But I would totally laugh if, and I'm pretty sure it's illegal, but if they actually flipped their position at some point and everybody that was goading them didn't realize that they're actually playing they're playing with them or whatever, that sort of stuff. But honestly, I think the only people who are screwed on this are the ones who just got super arrogant on this. If Left fits in that category, then sure, but I don't think that. I think most of the boomers and stuff like that are relatively safe, just because of the way this doesn't seem like a stock that they would plug money into from a from a retirement portfolio point of view. I would assume they're mostly in utilities and other safe like growth stocks, but not GME. Oh well. I think most of them only get hurt if they're short, for the most part, because Like let's face it, valuation for everything. Like we all know GameStop's not worth $200 a share.
Yeah.
Like I just want to try to establish that point. But in the meantime, as a portfolio manager, if I see something like this rocket, and again, it depends on the portfolio rules and stuff like that too. I would be inclined, because this is an unusual thing. I would be inclined, as from a risk perspective, to have taken some profit off the table, if not completely off this thing. But it's not what these retail traders are doing. Obviously, I mean, I don't know what we still have yet to see what the mass exodus from GameStop is going to be like. Like, what are they going to tank this to? Is the next question. But I think you guys pretty much answered the question of like what they're going to leap into next, and it's whatever sort of meme stock that they have to get going. Like, especially if there's someone there to challenge them on a second run. Like if Carson Block comes out and says, I think you all are dumb, and like I'm gonna short AMC because I don't see the movie theaters coming back. If Andrew Block, or say, yeah, not Andrew Block, if Carson Block comes out and says that, him and Muddy Waters, they're like, oh yeah, he's also a legendary short seller. Oh, he's also part of the Wolfpack with Andrew Left. He's challenging us, so let's try to teach him a lesson. I think that's going to be probably some of the catalysts that kind of kind of sets stuff like this in motion.
Yeah, that would be really bad. I think I think they need to learn the lesson that we learned in summer, which is we did short some of this mania. We did. We went out there and we shorted Kodak, and it gapped up. And we were like, we're closing. The second it unhalts, we're closing. And then we put rules in there that said we are not shorting EV. We're not. None of this stuff is worth this much. But we were just like, we're out of the way. And we didn't want to be the wet blankets. They need to just learn that lesson, honestly. Not getting in front of this train. Not doing it.
The thing is, the institutions are used to being that train. And Millennial, I still hear residual on your mic, but you've gotten so used to that they were the train. It didn't matter that they were like they couldn't take out, or sorry, it didn't matter to them like what the public market did, because they were considered the smart money in the room. And for the longest time, yes, they were, but this is a focused point of view that thanks to the power of technology and the internet and everything, has brought a whole bunch of people together. Collectively, yes. What was it? What was that saying where it's like, the top 10% in the world own like whatever percentage of the wealth? Well, what happens when the 90% of the 90% of those people who are collectively working together work against you? You're not going to have enough capital to like stop them from doing what they want to do.
Yeah, there's a couple of governments in history that we've seen what happens when the masses decide that they do have a voice. You guys could look up the Russian Tsar and what happened with him. You could look up Marie Antoinette and how that went. You could take a look at the American Revolution. This is what happens. And people are like, oh, well, come on, you're blowing this out of proportion. Really? The French Revolution, the Russian Revolution, the American Revolution, the Chinese Revolution, like you're going to say that those are comparable to what's currently happening in the market? Yep. Yeah, I am. Yep.
Okay, so Meow says that it's the top 1% owns more than 51% of the wealth in the U.S. Well, I would imagine not all the top 1% are like, trying to go against GME, so I would imagine like the 49% or whatever, it's not all full, but
when the masses realize they have the ability to play the game by the rules and have the same authority, if not what we're seeing right now, more authority. And the real scary thing is now they've got capital, right?
Oh, man.
Now they got the tendies to do what they want. I don't know, like if I'm one of the big boys, if I'm one of the sharks out there, if I'm a guy like Warren Buffett right now, I'm aligning myself with the retailers real quick.
I mean, isn't that what we've been doing for the whole December and January and everything? I'm just gonna go with it.
And I mean, I think it's interesting, Redemption, where you're like, let's all be honest, GME is not worth 220.
No.
I'm done. I'm done saying what things are worth. Because Shopify's what, $1,100? It's half of the Canadian stock market. I don't know. Is that what that's worth? We watched Airbnb IPO at ludicrous numbers, where it's worth what an entire sector should be worth, right?
Don't mention Airbnb.
I don't think that you can say this is what a company's worth. I like, it's literally, it's the Captain Phillips, right? It's like the retail traders are looking right at the market going, look at me. We are the Captain. They will decide what it is worth. And this has been an age-old market rule. What is something worth? What people are willing to pay for it. Apparently right now, people are willing to buy GME at 220. So GME is worth
at least 1,000.
Oh my God, don't joke, stop.
You're joking. But if news comes out tomorrow that other massive firms have now come alongside Citadel and Melvin, do you think that they're gonna, like, what do you think is gonna happen? You think that people are gonna continue the fight, or they're gonna let them win?
I think I'm gonna hold like my kids are attached to it.
Oh my God. Okay, well, that brings up a good topic. What do we do about it? What do we do now into keep? Because we all said a couple things that we thought might happen with it. So let's go around, and I'll start with Exile. What do you think that we should be doing about it?
Collectively, I'm not saying shit personally. I'm gonna trade the hell out of it till the wheels fall off. Fuck it. Hi, my name's ExiledInvestor. I used to be an investor. Now I just hurl money onto the bonfire that keeps throwing more back at me. It's what else can you do? It trades that I, as recently as the last podcast where I'm sitting and doing long DD sessions on fundamentals. Why? To make $1,000? Fuck it. Let's take the money while we can. Same as the SPAC train, same as we live in the age of crazy valuations. It is going to hurt when it goes full tilt boogie, You just got to trade what's in front of you, right? So it might not be smart money, but it's money.
Here. I second it. Looking at, it's really funny because Martini and I were there today, and it was like, you know what? This is what everything that we know says you should do. That at what was it? I can't even remember where GME is. Right? Where was GME?
When what 70s, what 80s, happened? 90s? What, you turncoded? I went full degen. You were like, I'm not touching this. This is ridiculous. Yeah. I'm not doing this. And then you turncoded within 4 hours.
GME at 100. It was like, okay, get out, Martini, because 100 scares people and it runs the other way. And it did come back down. And then it tapped the brakes and went, nah, forget that. We're just going to keep going. And after hours, it kept going. And now it's going to keep going. And before the market closed, I said, you know what? Enough. I'm done. I'm done fighting this. I told myself I was going to trade reality, which is the next thing that these people are heading into. I thought it was AMC. We were talking about a whole bunch of different potential tickers. I thought it was AMC. AMC 466 before the market closed. It is 626 right now.
Is it really? No.
Guys, for those of you that are listening to the podcast, we've been giving you updates throughout. It is now 625. GME is now 2.
It's 2 million volume. It's after hours and it's trading like it's the daytime.
That's one thing I noticed. I mean, the last couple of days I've been up at the wee hours in the morning, and as soon as pre-market opens, the volume goes through the roof. And I don't think it's a coincidence that the WallStreetBets Discord is hyperactive, and the clubhouse
248
is hyperactive. It's bananas. As soon as it hit this morning, it was like bing, and then it was literally just a sea of suggestions for BlackBerry, Nokia, but it was all reverting back to no, we're going again on GME. It's like, oh my God. Like, you can see it coming. That's what's horrible about it, is you don't even need a strategy or tracking. You can just basically walk in the room, take a sniff, and know what you're getting. It's ridiculous. It's like, yep, that's going to blow up today, clearly.
Unbelievable. Okay, 656. I don't even know. This is pure unbridled mania. I know, coupled with the perfect storm of options leverage. This is pure leverage.
Oh, yes.
Pure leverage. So basically, we calculated the other day. I know the question is, what are we going to do about it? But we calculated the other day that with just 20,000 options, they could control 5% of the average daily volume of GME calculated as of Monday.
That's awesome.
And so for those of you who don't know options, 20,000 times, you would do 20,000 times 100 because they're sold in lots of 100 times the price, and you would get how much money they're really controlling. And that's the power of leverage, right? And so on that note, what would I do? I'm obviously trading it. I'm in the same camp as Exiled. I mean, why would I sit there and do these long DD sessions? Yes, I have DD'd things for years before I get into them, or during, or making sure they're okay. And why would I do that right now? I think there's one thing that everyone who's in business knows is to go where the money is, right? If there's a field that's growing, it reduces the difficulty level of something, because the rising tide rises all boats, or whatever the phrase is. I think though, on a risk basis, we all need to have some kind of hedge or long volatility. I see this not ending well.
That's what the serious side of my portfolio is all about, is long volatility for 2021. And we talked about it, I think, in the last podcast. This is not my long-term portfolio.
No, really? You don't think AMC is set for a resurgence of technical EV HTML supercomputer loveliness?
Yeah, I mean, my portfolio right now is, I've got my SPAC Insanity, I've got my latest degenerate play here, and then I've got 30% that's just tucked into my Bitcoin play, because I see Bitcoin as that long-term hedge. And it's like, I think that when shit hits the fan, crypto this time around is going to just be a place where people go.
Because you can't do this market manipulation. Oh yeah, you can.
My favorite quote on it that I just read is, GameStop, despite not wanting to give me more than 20 cents in store credit for a console and 300 games, just paid for my college education in full.
Oh my God, it's totally insane.
Honestly, I think, here's the thing though. For most people who do listen to this stuff, yes, most of them would be new to investing and stuff like that, right? I think experience also plays in a factor, and I unfortunately have to be the responsible one here, but I think experience plays a factor. All this is fun and crazy and stuff like that, right? And it's great to be exposed to stuff like this, but I think honestly, most people should, and if they don't know what the hell they're doing, if you have less than, I want to say 2 years, 3 years experience, I really think you should just, whatever strategy you were originally doing, stay the course with that strategy.
Yeah, millennial.
There's no point in there's no point in leading into other strategies. Okay, Millennial's the exception because
Get your hands off my tendies.
Don't tell me how to live my life. How about that, huh? How about that?
Redemption
to be fair, and I keep having to say this when I explain Millennial to people, is that Millennial is the exception because I've never seen someone adapt to change so freaking quickly. Like,
well, yeah, as Teeny put it, he's exceptional.
Yeah, he's one of the fastest people I've ever seen pivot in trading, ever. Like, and this includes, I don't know, the couple hundred to 1,000 people that I see go through my firm, the people I talk to whenever like stocks become relevant again, and I meet a lot of people with my original ex-firm job because we just like took anybody in with a pulse, and then if they're good, they keep them. If they're trash, they just throw them out, or they keep them around for like entertainment value. And then when the new batch comes in and we need seats, then we just throw them out. Right? That's how vicious that environment was. Now, and then like with the whole meeting of people in the film industry and stuff like that, I meet a lot of people. Strangely, I don't like a lot of people, but I meet a lot of them all the time. And Millennial is one of the few people that actually do touch on stocks and talk about them and stuff like that. Millennial is actually the one that stands among all of them that actually pivots as fast as he needs to. But having said that, though, if you have a winning strategy, something that's consistent, something that's working, I strongly think that you should be staying the course. It's great to check out and explore into this stuff. Yes, there is money to be made here, but I think that you need to first establish that. Remember how I always talk about actually, you guys wouldn't know because I used to talk about this way back in the day, where I'm a big believer of building that base first, so you have some income coming in. This isn't like your main focus or anything like that. No, I didn't get screwed on this position. I'm reading the goddamn chat here. I think it's important that you guys establish that base first so that you have a baseline to fall back to, because when this strategy starts falling and starts getting fucked, you have that to fall back to. Whereas if you were leaping from one to the next, and I see this in one of the other streamers that I watch too, he goes from one strategy, all belief into it, all vehemently fanaticism, whatever. He just turned $100 into $1,800, and that he's making more money than both your parents combined, and all that sort of shit, right? But that started to fail, and it wasn't because there was a multitude of reasons why it failed, right? But he starts leaping to another strategy, and then another, and another, and another. It's not that strategy was bad. It's just that it wasn't the time for that market or anything like that. But had he stuck with that strategy, he would have actually still came out positive and green. But he keeps fucking leaping to this new strategy, to this new strategy, to this new hype strategy, to this new hype thing here and there, and he keeps losing money constantly because he's always getting it after the strategy becomes mainstream. He doesn't come up with anything new, and he doesn't. It's not something that's stable and consistent in the long term. So I unfortunately, for something like that, I had to kind of put my foot down. You have to have a strategy you can fall back on.
Put his foot down.
Burry has decided to join us on the conversation here, guys. Burry's input, as he just tweeted, if I put GME on your radar and you did well, I'm genuinely happy for you. However, what is going on now? There should be legal and regulatory repercussions. This is unnatural, insane, and dangerous. Now, if that's not going to stoke the fire, I don't know what is.
Well, let's talk about the legal aspects. And none of us are lawyers, guys. Remember that. You should consult someone who is a securities lawyer who has a license, as always. But what do we think about the legal aspect of this? How
do you police it? How do you enforce it? So historically, the SEC, I used the example earlier when we were talking about it in Discord of Navinder Saro, who was the guy who got the finger put on him for the flash crash in, I can't remember what year it was, a few years ago. And because he was spoofing, right? And but since that case, it's become apparent that he was a tiny amount of the flow, and not a nothing, but it was irrelevant as a. Anyway, my point is they take one person and make an example out of them. Typically, ideally, the person who instigated it, or the whoever's highest up the food chain, and then they go to court and they get the full cold hard hand of justice rammed up them. I don't think Burry is. No, I'm just saying that's likely what's going to happen. I don't think Burry's. I mean, I definitely think he has a point. I mean, this is mania to the extreme, way worse than we've seen before. But I think it's really. I mean, I'm saying, what can you do about WallStreetBets and things like that? They're largely anonymous. I mean, there's some that aren't as anonymous as others, but I mean, there's 2.5 million people in that community. That's more people than the city I live near, and it's a decent sized city. So, yeah, I mean, just on another note, I just saw that, what's that dude's name? The kitty dude, Deep Fucking Value. The guy who streams on YouTube from WallStreetBets, he made 9 million a day. He's up 9 mil just today.
AMC just touched 7 and cleared out whoever was there selling at 7, and now it's heading back up again.
This is stupid. I don't even know. Okay, so about the legal aspect, right? So you can't induce anyone else to trade. Right? Like, there's this, and I don't know what I read. To be honest, I don't know if it was a real lawyer or not, but they were talking about group trading and how that's illegal, yet market manipulation, nobody has gone down for market manipulation in a long time. I don't know what to make what is what. I have some YouTubes that are real lawyers who stream on YouTube that I want to go over and look. But my suspicion that this is just what the internet does. I mean, so they get obsessive about stuff. I mean, they buy bricks. If anyone knows Supreme the brand, they buy bricks for fucking
easy now.
I'm just saying it's the same thing. It's about what is something it's willing to pay for. Right? Exactly.
And the other thing though is, I mean, you've got a lot of factors at play. So when you've got a community that big and there's that many comments and threads and conversations taking place within it, there is undoubtedly going to be some stuff that crosses the line. And it is going to be just straight illegal. If they feel like paying it attention, then yeah, that person's fucked. And I'm sure there's countless examples of it. I've seen plenty myself. There's also this huge gray area in the middle, which is sort of like in that, you start throwing phrases like free speech and conversation and, I was just talking about it on Twitter. It wasn't a strong recommendation. It was just, there's a lot of fluffy gray area there. And ultimately, they don't have the manpower to collectively go after 100,000 people who were pumping. They'll find maybe 10 or something like that, and they'll just chop the head off.
So who are they going to go after, honestly, you think?
It'll be whoever's made the most money on it, whoever's been the most vocal and the most popular about it.
I'd say whoever's public.
The community leaders, effectively, like Deep Fucking Value. He's one that's up there that I guarantee hit their radar. You can't make 9 million in a day on a stock that they're probably already looking at and expect not to get at least a knock at the door. If you've been saying, I'm not saying he has because I don't pay him that much attention, but if let's say he's gone out and said, let's pump this, then yeah, he's fucked. There'll be at least a dozen big names, I'm sure. But there's the probability. It's like piracy. It's why I draw the comparison to the pirate bit. It's like, okay, so the odds of you getting caught when you go and watch a hooky UFC stream is basically zero. The odds of you getting caught if you stream one, like if you distribute it, are slightly higher, but still barely going to register on anything. It's only when you get an audience of 20,000 that they're going to stand up and take, notice of you. So I think ultimately they'll probably, it really has to be, it's like aviation and nautical law and stuff like that. Generally, you don't get laws changed until there's been a disaster, right? I think that's probably what you'll see. I think you'll see, okay, this is enough. This has got too crazy. We need to cap. We need to raise the barrier to entry for retail investors. You can't trade options until you're 20 grand or something stupid like that. You'll see those kind of measures put in place down the line. You can't snuff out a community like that because they'll just go somewhere else. WallStreetBets are everywhere. They've got Clubhouse. They're on Discord. You can shut them down and they'll find somewhere else. You'll find them on 4chan and 8chan and 12chan and whatever, So,
I mean, the other thing is, if you come in and we're hearing people say, okay, well, the SEC hasn't really gone against anybody for kind of collusion and influence. They haven't done it. Whatever rules that they put in place here has to be enforced on both sides of the coin. So
exactly.
if you put in rules here, how many institutions are about to get their ass handed to them? Because I promise you, these guys that are making this money, whoever it is that's going to get called to task here, his attorney's first counter argument will be, fucking Goldman Sachs? Anyone?
Like, yeah, again, they can go any one of these. Anyone with a license and a fancy business card can turn up on CNBC on any given day and say, this is an amazing stock because I'm a professional and I said so. And ultimately, what's going to happen if you've gone after the retail investor, or if you've gone after WallStreetBets, fuck retail investors, just WallStreetBets. It's a huge community and they are activist effectively at this point. They're going to retaliate en masse. They're just going to start going they'll prove their point again. Basically, that it's almost like they're weaponized now. That it's not just now; they've always been that way. If you push, they're going to push back, and it's going to be way harder than you think. And it's if what Andrew Left's been talking about in terms of the repercussions he's had for just talking shit about a stock, and vis-a-vis his family being threatened and shit like that. This is a community of 2.5 people. There's going to be plenty of morons and idiots in it that will do that kind of shit. So it'll be the same thing. It's just, how hard do you want to poke that honey badger? And the answer is probably going to be not very, but it's much easier just to softly phase in some new regulations and laws. And I don't know. I don't see a huge crackdown on WallStreetBets just yet. If it gets any further out of hand, it might start turning a little, but I think they just regulate it and just, it might just be the new, it might just be the new dynamic that, hey, you've got all these apps that have made retail investors vocal and powerful, and this is just something you're going to have to deal with now. It's 21st century.
So...
Redemption, you're awfully quiet over there, buddy. What do you think?
I
calling him out.
think, I said it before. I know the other side of the industry well enough to know that they're very fucking petty. Obviously, being able to make a buck out of this is paramount, but I think what we all fear is that there's going to be more regulations that are literally unnecessary, and it's just no good is going to come out of this, because everybody was so complicit for the longest time of I'm willing to oh god, like even they're willing to get screwed by the institutions and just go back and do whatever they want, right? But you basically shit in their playground, and they're not going to be very happy. Obviously, they haven't been very happy with what the outcome was. But most of them are so, I would say, arrogant and egotistical that they can't see beyond themselves that they actually need to evolve, because a lot of the procedures, like hell, like I think I mentioned a couple times where if you read Reminiscences of a Stock Operator, a lot of what they do still holds up true today. And that book was like what incepted in 1920, 1930s or whatever. If they haven't changed for like the last like almost like just under 100 years. So I mean, like the fact that they came in and did all this sort of stuff, there's a reason why finance and everything is just so long drawn, boring, and convoluted. It's because, and I found this really funny because, you know, when I came to with the with my Dark Bull stuff, I realized one very succinct thing. It all boils down to one point, and it's not like, you know, I'm aware of, you know, this affecting this affecting that, or whatever, right? It's the one point is, where do they buy in at and where do they sell with their entry and exit. That's the most important point. Now, you basically thrown all that out their window, like all the stuff that they could have done before, all the superior information, all that sort of stuff, and these guys are literally throwing money at it. I like to think Hertz was the test for this thing, because they tried to like throw money at a bankrupt stock, and I don't know what it's at now. I think it's got delisted to the OTC or whatever. But it did. That was a game that they liked because you threw money at it. They're like, okay, sure, go right ahead. It's all bankrupt. Here you go. Here's more shares. Here you go. They could handle that because that was a game they understood. But GME is like, I think no one really, I don't know about Hertz if I think they just bought shares in Hertz, right? But I don't think they actually use a lot of the derivatives. But now, because they're using the derivatives, it's more money that they could handle. And I think, I think I'll just leave it at that. I think that they are planning something very big, and it's likely probably going to be a regulation. They might not prosecute anybody, but they're going to make the game harder.
They like the SEC? Is that what you're saying?
Well, not the SEC, but I'm talking about they as in, like, you know, the mythical figures that are around that round table, like one from Goldman Sachs, one from BlackRock, and all that sort of stuff, like those guys. And the top levels of people who are very like high up in that space, I think they're going to have a sit down conversation and discuss on what to do with this situation, because, or actually not how to deal with us, but actually how to weaponize us for their own benefit, per se. Because if you guys also remember, because I just remember this now, but like, you know how easy it is to actually get if you can get past the post in WallStreetBets or whatever, right? Like if you actually post something, it's not hard to push your thing to the top. It's very, very easy, because there was actually a documentary on it where this dude would basically, he had like 100 or something, or 100 or 500 bots all on virtual private servers, virtual private machines or whatever. And then what they would do is, since they all had their own Reddit accounts, what they would do is that they would make a post and they would upvote it with all their robot accounts. I think it was actually, no, I don't think there was 100. I think it was only 10, but they only had 10 of it, right? And what they did was, anytime someone had a negative post or whatever that came in and said like, oh no, this thing's trash, don't listen to it, blah blah blah, whatever, all 10 of them would downvote that, and what it would do is it would hide that comment, and all these other guys that are their bots or whatever would say like, oh, great video, blah blah, all that sort of stuff, to try to make it seem like it's a legit, you know, honest, like everybody had a positive interaction with that post. And what they found was that when they did this, it would gain traction to the point where just random people who just like come across and read it, they would just upvote it and keep upvoting it to the point where it would just push it to the top of trending page. I think that if these institutions are smart about it and they actually did do their research, I think that would actually be a route that they would take. They would say, no, don't worry about it. This is okay. You guys played the game. We lost. But I think that if they weaponized, being able to shill these things, because let's face it, any one of those Wall Street Bets moderators, all of them are corruptible. You come in there and you say like, hey, here's 10 grand. I wanted to make this post. I want to make this deal with you, blah, blah. Depending on what their monetary situation is, because these are people with a lot of money to offer. 5-10 grand is really lowballing it, right? But let's say they just come out and offer you. I think the simpler question would be, if you were a Wall Street Bets mod, someone out of nowhere comes in and says, I want to offer you $100,000. Are you going to? Is your loyalty really that strong to this thread or whatever? I would doubt not, because you get nothing, absolutely zero. You don't get paid to moderate this thing. You get shit on. You get constantly berated. Here's someone coming out and saying, "Hey, here's $100,000 if you just let me post this thing and or post these things, and you just keep giving them like the go ahead or whatever, right? Because we'll make it seem legit or anything like that. You don't have to do anything. You just have to approve the post." They push that. They keep pushing it. It gets popular. It gains traction on Wall Street Bets. Boom. There you go. Institutions just weaponized a whole bunch of people with 1 to 2 million people with a lot of well, not really a lot of money, a lot of leveraged capital into something that they want to push themselves. I don't think they'll ever short. If they start shorting, then that's going to be very interesting. But I think that's probably one of the best ways that, if I was an institution, to weaponize this thing. I think that's what they're probably going to do if they're going to be smart about it.
Well, that would be highly illegal, but yeah. I mean, it seems crazy. I don't know. Like the internet is so easy to hide yourself in the internet. I mean, at least when I talk to or read about cybersecurity and I don't think they would even have to do social engineering, really. I don't think you have to.
Well, and add in the protections of Section 230 in the States, right?
Yeah, I mean, and then the platform isn't responsible for what people post. I mean, so I don't think you even have to go that far. Someone could just, I don't know. I remember reading a documentary about the susceptibility of platforms to help things trend. I mean, if you guys are good, if marketers are good at helping people get on trending charts, I mean, I'm sure that people who are good at computers could hack somehow, not hack, but necessarily like just know how to make something on Reddit go. I mean, I could see that.
That's it for this week, guys, and apologies again for the slightly abrupt ending. We hope you enjoyed the episode, though, and don't forget we have a super active community on Discord where we hang out most days. We are asking questions, talking all things investing, sharing information. Entry is free, and there's no reason not to join us. This podcast is for entertainment purposes only, though, and none of us are licensed financial professionals. We are not qualified to give investment or financial advice, and nothing we say should be construed as such. Please seek the advice of a licensed professional before you make any investments, and you really should know the risks and the potential for losses before you invest. So, guys, apologies again for the small technical issues this week. Hopefully the quality was good enough to not be an issue, but we'll endeavor to try and get it right next time. For those of you watching on YouTube, please don't forget to like, comment, and subscribe. I know everyone says it, but it really does help. And in the description, you'll find links to everyone's socials, the Discord, and Twitch streams. For you audio listeners on Spotify, Apple, or wherever else you choose to get your podcasts, please don't forget to leave us a review. It really helps us reach more people and grow. Have a great day, guys. I've been ExiledInvestor. This has been the Slap That Ass podcast, and you've been amazing. We'll see you in the next episode.